Morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Friday morning pre-market webcast. Okay, so let's talk a little bit about yesterday, a little bit about the big picture and where we stand now. The most important thing that happened to me, that happened yesterday was, you just saw this resiliency by the bulls. The bears put in a bearish engulfing candle on Wednesday. And really, we're in a position there right at the close. You had a big number come in. The 56s printed, 56.75s, and the bears, had another moment in time to really knock this thing over. And from the minute Globex reopened at 4:30, it was nothing but up all the way through Europe, all the way into the open yesterday. We retested the 1377 level. We did it twice. We couldn't get through. So if you're a bear, this morning you are screaming double top. And maybe that's the case. But what's happening now is the dip buyers are coming in again here in 1368, which is where you've seen them come. They've been in at 68, they've been in at 63. We're currently trading 1370.75. So the issue becomes, are the dip buyers going to run this up for another 10 handle winner, or are they going to get turned away? So that's basically what's happening right now. Big picture wise, the bears weren't able to make a lower low yesterday after the bearish engulfing candle was put in. We're in a raging uptrend. And I posted yesterday before the open and to the people in the chat room, and I sent out to my subscribers, basically my thoughts on the next month, which are these. To think this market is going to ride the upper Bollinger Band to the moon is just not, it's just silly. It's the same thing that I say when the bears think we're going to ride the lower Bollinger Band to zero. It's equally silly. But this market is in an uptrend. We could pull back from here. We could do 100 handles straight down and still maintain the 200-day exponential moving average, and the longer-term money would say that we're still in an uptrend, and they would be right. Okay. So we are in need of a pullback. But as long as the dip buyers keep coming in and the bears don't have the fortitude to turn them back, you're going to see short squeezes and then more buying, and we're going to move higher and higher and higher. How high? I don't know. But until the bears can break the dynamic of the dip buyers, we're going to stay in this, we're going to make a low during the day, that low is going to get bought, and it's going to get run up to new highs. The bears have to break that dynamic. It's up to them. The bulls aren't going to do it for them. They have to do it themselves. So that's what I'm looking at right now. You're looking at a market in an uptrend that needs to retrace a little bit. It's going to retrace the 20-day moving average one way or the other in the next week, because price and time are going to meet each other. How the market reacts to the 20-day will say a lot. The one thing that I am looking at is what the Russell does today with its 20-day moving average. It broke the 20-day exponential. It came pretty close to getting it back yesterday, and I want to see how the 20-day plays today in the Russell. If the 20-day proves to be resistance in the Russell, then I think that we are nearing a retracement time for the S&Ps. Let's do support and resistance. Current trade is 1370.5. Upside 1373, 1377 to 1378, 1383, 1389. 1393, 1396, and 1401. On the downside, we got another pivot zone today, a daily and 3-day, coming in 1369.58 to 1369.5. So, and after we failed to take out 1377 last night, I put an overnight trade on for my subscribers. We came in at 1376 to 1376.5 to 1376.75. We sold in there, and we put bracket orders on overnight to hit that pivot zone, and we took the trade off early this morning. So when you see daily and 3-day pivots that are tight like that, they tend to be magnets to price. Now, what I'm seeing now is that we may want to snake around that level a little bit today. So, but 1369.5 is a big number on my board today. We've got 9-day pivot coming in at 1367.33, then 1363. 1358. 20-day pivot is 1357.25. 20-day exponential moving average today is 1354.41. So in case we dump down, If we get to that 20-day exponential moving average, you need to be very aware of the price action. Below that, the 1350 quarter swing low and 1347. So everybody have a great day trading. Have a great weekend. Mike Vacchi, Princetontrader from Mr. Topstep. I'll be back Monday morning with another webcast. Use stops, guys. Be hedged. If you've been long this whole time, keep taking profits. This market has given you so many chances to take profits above 1370. It's just ridiculous. So please take advantage of that and trade them well. See you Monday.